Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody's doing great. Let's get right into it. A couple things I want to cover today. Over the weekend, I wrote, I've been writing after the last couple of weeks. Last week, as you know, we were kind of just in a range in the S&P, with lots of bearishness. I wrote about it actually 2 weeks ago. The fact that when you have this kind of put buying, shorts in the market rarely will accommodate that type of, lopsided sentiment. And so this 2-day rally that we've had to open up the month shouldn't come as a big shocker to anybody, really. Friday, and again, as the market tends to do, tends to fake out most people. Friday's close, everybody, that was kind of the broke that, the straw that broke the camel's back, if you will, in regards to getting people to give up on this market. And sure enough, right, anybody that sold on Friday close is obviously not doing well over the last 2 days, or lamenting, or maybe even coming back in again and chasing. So where are we at now? So we took out the Friday, as I was with you guys on Friday, we did close right below the the June lows. But I also made a note to my members this week about the Russell actually holding the June low. So the Russell actually is, if you want to think of it on a relative basis, is actually stronger than the S&P or the Nasdaq. But so that's all well and good. Again, let me just remind everybody, if you want to subscribe to the newsletter, go hit the link below. If you want to spend 5 days, we just closed out. So let me just kind of bring you up to date as to what we're doing here at TTS. We just closed out our XLE long position for a really nice profit. I think I mentioned that on Friday. So the oil, in fact, the XLE is one of the best performers in the last 2-3 days. And so we just closed that out. I closed it out simply because we have an OPEC meeting tomorrow. The market obviously needs a pause. We will get back into it on a pullback. And I am going to look at oil. Actually, I'm setting up a short in oil for our members. It just went out as we speak. So, oil still has, some work to do above 90. And it's had a massive run up, and we did catch the bottom there at 76.44. I think if you look at your daily charts on oil, 96.44, 76.44 was the accumulation level. And so now we've had a massive run up in oil, and it's still, I still think we are going to have some issues getting above 90. So in any event, that's oil. And we did get out of that. We're still long TLT, the bond market. That's struggling. By the way, if we cannot get the bond market to, we've had a nice pop in the bond market, especially I've been talking about the 2-year. The 2-year did have a nice rally. Yields have come down. But here's the thing. If we cannot get yield, in other words, today, in fact, was interesting because the bond market did struggle a little bit today, right? So we need to get the bond market rally to continue. If in fact this stock market rally is also going to continue. One positive was the dollar, and I meant, again, I've been talking about the dollar. We had a and I think it was here that somebody was asking me last Friday whether the dollar had a blow off top and so on and so forth. And I kind of mentioned that looked possible because of what happened with the Bank of England. And now we're getting closer to that. On the dollar index, if you're looking at the dollar index, the 109, 110 area is a daily accumulation. So that's going to be really, critical in terms of whether the dollar is actually now topping or this is just another pullback. We've had these before. The difference is, if you look at your charts, by the way, if you pull up your daily, you still want to give the dollar clearly. We still want to have the give the dollar strength the benefit of the doubt, if you will, right? By the way, can somebody type in the chat if you guys can hear me and see me okay? I haven't seen anybody chatting in here. So if you can just do me a favor, if you're listening, just type in yes or whatever. So I know that maybe there's some kind of connection issues I'm getting on the chat. Okay. All right, cool. All right. Hi, Steve. How you doing? Okay. Okay, so where was I? Yeah, so the dollar, right? The dollar needs to hold on to this 110. And by the way, if we continue to fall the dollar, that is also going to be a positive for sure. It's going to be a positive for stocks. So keep an eye on the dollar and bonds. It does feel like we may get further upside in stocks if all this continues, but it's too early to say. Now, we have non-farm payrolls on Friday. We had the JOLTS today, which actually looked pretty good. That's actually, we did have, that was a positive because I believe there was less job openings. And so obviously bad news is good news for the market. And so that was the JOLTS today. But on Friday, we get the big number. And as we know, all these economic data pieces are what could really change the whole dynamic, as we know, right? So we've had these rallies before, as you remember, going into the CPI number, going into, the Fed and the Jackson Hole and all that good stuff, right? So I think, this, for now, we can just deem this rally that we're witnessing as a relief rally of oversold, lots of puts. When those expire and get burned off, again, we could resume the movement down. So Friday is going to be really, really critical, and what we need to see is an uptick in the unemployment rate. Bottom line, right? Because an uptick in the unemployment rate will suggest at least that the whole Fed thing is gonna they're gonna, at least, there's no way they're gonna stop tightening, but at least more data comes together is anticipatory, and possibly then people will start talking about, well, they're gonna probably stop raising this year, and again, the market always looks forward, not backward. Okay, so that's something to watch for. Now let's get into the levels on the S&P. We've clearly had a really strong level. I would say the next level to look at in terms of possibly shorting the market. There are a few levels, but I would suspect we go up all the way up to around 3,900. 3,950 would be the first level I would look at to be shorting. There's some kind of lesser quality levels in the middle of the move and so forth. But I would probably, for the highest probability setup, I would go up around the 3,900 for the first level, and then up around 3,950 on the S&P. Okay. On the NASDAQ, similarly, hey, how you doing, JT? Hope you caught some of this move. Yep. Yeah, and on the S&P, I'm sorry, on the NASDAQ, we have around 12K is where I would be looking. in the Nasdaq. So we still got some legs here, possibly. Also, again, we're long. We're long Taiwan. Yep. Yeah, we're long we're long Taiwan still. We just we just sold our XLE calls for a really nice profit. And we still have TLT, and I do still have the hedge on with Apple in case the market kind of comes off. And I am going to put on another volatility play in the options market in the SPY going into Friday's non-farm payrolls. So just kind of anticipating some of the stuff that we're doing here at TTS. Is a great start to the month with our TSM calls and our XLE calls. Okay. Again, if you guys want to join me for 5 days free in the in our morning session, again, go to the link below, sign up, and I've had a bunch of I've actually had a lot more people coming through, so that's great, and actually getting some levels while you're at it, right? JT, yeah, we remember I told you we actually bought a TSM right on the lows. So we got so just to give you an idea, we bought TSM at 68.34. If you guys look at your charts, by the way, hopefully everybody has their charts up, right? So check out the charts. We bought TSM at 68.34. We got XLE at 68.96. Look, pull up XLE, 68.96 on XLE, and TLT still kind of struggling with that one. But we did buy XLE at TLT right about here, 103.38. So that one is still kind of working, but not great. And then we bought some Apple puts on the close, actually the last 2 hours on Friday, just as a hedge. So we're a little bit upside down on that, but I only paid $250 for those, so we're good. And then I am going to look to, there's a bunch of great setups coming up that I'm looking at. So if you guys want to join me for our free sessions, you'll get a glimpse of that in the currency markets because of the dollar. So the dollar is getting really further evidence that it's going to topping. And I am looking at the euro. I'm looking at the British pound. I'm looking at unfortunately gold ran away from us. So did silver. I don't know if you guys remember. We did catch a nice move in silver last month, but it just got away from us. So that was a little frustrating, but it is what it is, right? We'll catch another pullback on silver and gold, but on the bonds still on the 2-year. I don't know if you guys read my newsletter this weekend. I mentioned a level on the 2-year, which I'm really starting to focus on a little bit more. 102.17. We did have a nice pop off that. And now we came right up to that 103 level on the 2-year. If you haven't traded, by the way, if you haven't traded the 2-year, I would encourage, again, obviously you have to assess your risk and so forth, but it's a $2,000 per point contract. So unlike the bonds that you're used to, the 10-year and the 30-year, it's $1,000 with 32. It does have 32 ticks. However, it's a $2,000, it actually has an eighth of a tick in between the 30 seconds, if you will. It's 62.50 for one tick, 781 for the eighth of a tick, if you will. And one full point, let's say from 102.13, let's say on the low, let's say you go from 102.13 to 103.13, that's $2,000 on one contract. So if you guys haven't traded the 10-year ZT on the Thinkorswim, so you guys may want to check that out. I am going to set up some trades on that coming up. There's some levels coming up on that as well. So again, obviously everybody has to assess your risk temperament and so forth before you get involved in any of that. And I'm not making any kind of specific recommendations, as you know. Anyways, that's kind of what I'm looking at. Overall, I would say, this is still a trading market. I would say overall, I mean, if you're looking at on the 10-year, if you look at the 10-year, it hit 113.23, 114. So if you pull up your charts on the 10-year, you'll see 113.23, 113.14. That's a very clear distribution level, very clean. But here's what we're looking for at TTS on that. If indeed we have again, and this is really important, because if let's say we fail from here on the 10-year, 113.23, and flop right over and come all the way back down and maybe even test the lows again, well, that kind of kills the rally, the stock rally. But one of the things that I'm looking at now that we've had, even on the stocks, by the way, is how they react against these distribution levels. We know that if we pause and then keep going through all these kind of shorter term distribution levels, that is actually that's a net positive for stocks going forward. How, if you've noticed, every rally we've had, like the June rally, that was just a monstrous rally, and we rallied almost 500-600 points on the S&P. Could we be in the midst of that? Well, it's too early to say. I think Friday's jobs number, and then we got bank earnings coming out next week, and then another Fed meeting and CPI and all that. So I think it's data dependent. It's going to be interesting. One thing also to note is, and again, the seasonality. So I was mentioning, as you guys know, on here and in my newsletter, the kind of negative seasonality coming into September. Clearly that panned out. Clearly that proved to be correct. And now going into October, the bear killer again. Whether again, it's JT. It's I'm going to see in the next few days. I want to see the character of the pullbacks right now. I actually do have a pullback set up in the Russell, and the Russell, I'm more interested in buying a pullback because, again, on a relative basis, the Russell seems to be stronger, right? Remember, I mentioned in the newsletter, and what I'm not even sure. I write so much stuff, and I'm on so many things I can't remember who I talked to. But I don't know if you remember if you look at the chart of the Russell. The Russell did not break the June lows. So that's worth noting, right? So the fact that the Russell is holding above the June lows is very, very important. So I mean, on a relative basis, that seems to be the stronger market. But I would look at, some pullbacks on NASDAQ. But what happens is, look at where, look around the 11,365 area where we broke out a little bit off that last kind of drop. If you look at your 2-3 hour charts, 4-hour charts, you'll notice that we attempted a rally last week on Thursday, and then that failed, and then we actually fell off. I would not be shy about selling rallies here either, right? But like I tell everybody, if you sold the lows on Friday, you're obviously, you probably got stopped out already. So I tell people, do not chase the market down. That has not worked even throughout the summer. What's worked, and I'll continue to stress this, what's worked is selling the rallies. And again, it runs counterintuitive and it's not easy to do. But if you think about it, that's really what's been working. If you sold Friday's low, you are in a world of hurt if you're still trying to hang on. And again, you basically are you were following the herd, and you know how that works. If you were following the herd on Friday, well, enough said, right? And you were, yeah, and it was definitely a herd. We had, sentiment 60% bears, record put buying, massive net short S&P futures contracts. So you got to be careful. Again, as I say, when I wrote the newsletter on Sunday, I said, you got to be careful not to be on the same side as the majority, because the majority always loses. It's very tough for the market to accommodate the majority, especially when it's heavily leaning on one side of the market. The other thing is, the VIX. I'll kind of finish up with this. Remember, I've been talking about the VIX at 35. Guess what the high on the VIX was last week? Can anybody tell me? It's kind of a rhetorical question. Look at the chart of the VIX, VIXX, or whatever whatever platform you're using. Tell me what the high on the VIX was last week, right? It was, to be precise, it was right around 34.80 something, right? And so what does that tell us? Could that have been I've been talking about this as well. 35. I mean, it didn't, Friday maybe felt like a kind of a washout, right? Fridays, Friday everybody hitting lows, and everybody was kind of, fear and loathing, as I wrote on the weekend newsletter, right? Loathing the Fed and fearing further losses. So in any event, we'll see. So could we come all the way back down? Conversely, in the summer, when we had that massive rally and the VIX broke 20, what was I saying? Same thing. So could we make a round trip back again? Well, if we do round trip back down below 20 on the VIX, you'll probably have a $500, $600, 800 point rally in the S&P. We're still, by the way, sitting at 29. So there's still some fear out there. So that's another kind of net positive I would look at in terms of whether the rally has some legs. Okay. So to recap, everybody, relief rally, not a big shocker. Again, we did participate in some longs. I did, just to recap again, for those of you coming in a little bit later, we did sell off the positions that I'm working on right now. So just so you have an idea, I am trying to buy a pullback in the Russell. I'm still long, TSM, still long TLT. I will be doing a SPY going into the Fed Friday. I'll be doing a SPY volatility play. And I am going to look to buy. I actually I'm looking to buy JPM. That's running away from us too. I think I mentioned that on Friday. So didn't quite get down to our level. Still looking to buy some banks. I think banks are going to be attractive. So in particular JPM, I'm looking to buy that. And I am going to look to short oil tonight. I don't know if it's going to hit tonight, but probably in the next couple of days. So that kind of sums up what we're doing. We had so we're getting off to a decent start here at TTS. Again, we track everything. I am having a class, by the way, just want to announce that, coming up, not this Thursday, but the following Thursday, having to do with hedging with options and so forth. So if you guys are interested in that, I don't have any links yet on that, but I'll talk about that on Friday. Check on YouTube and whatever. But again, if you want to join me for 5 free days, hit the link. I know some of you, in fact, let's see, Steve, I don't know if I saw your name come in terms of you wanted to come into the free sessions, but I never heard back from you. So in any event, hopefully we'll see you for the free sessions at some point. Okay. All right, everybody, I'm going to get out of here. So again, if you guys participated in this rally, in some degree with either long stocks or whatever, great for you. Again, if you want to see what we're doing at TTS, again, 5 free days with me in the morning. You want to join up with that, sign up for the newsletter, follow me on Twitter, give me the thumbs up. Again, let's grow the channel. It's been growing pretty nicely, getting over 100 some odd views. So, and I will be. I know there were some requests for me starting to show some charts. I will probably be easing into that. But again, if you want to look at the charts full on, just come in and join me for 5 days. I mean, that's all I do. An hour and a half, just every morning, real time. And maybe I've had a few people actually take some good trades out of that. So it's free, right? The best, as I say, the best word in the English dictionary, correct? All right, everybody. Again, trade safe on Friday with the non-farm payrolls, and I'll be with you guys on Friday. If you have any comments, requests, hit my support staff. I will reply. Okay. All right, everybody. Have a great rest of your week, and I will see you on Friday. Take care.